Uh-oh. Is it time to sell the news? Because that's exactly what traders did today. The Fed goes big and traders sell the news. Have a look at these areas. This is the open. This is a really important area. This is a key area. And then we went down. Remember, I said specifically, I do not want to see stocks go higher between 2 and 230. Otherwise, there could be a knee-jerk lower. That's exactly what happened. So what did Jerome Powell do today? Well, it looks like it was a hawkish 50. That's what I heard. And people are concerned that the majority of declines, again, in a bear market happen after the Fed's pivot. Well, that's exactly what Jerome Powell did today. He pivoted. So negative 35, 51, 58, 27, 48, 36. Take your pick. Doesn't look all that good. So we're really hoping it's 1995. And here's an omen back to the 2000s. Bowman descent over cut is the first time there's a Fed governor descent going back to 2005. Here's a summary of what happened today. Not going to waste any time. One cut of 50 basis points today, and there's two cuts priced in for the end of the year. What does that mean? It means right now the Fed funds rate is at 5.33, and they've reduced that by 0.5. A basis point is 0 points. So 50 basis points means 0.5. So they're going to take 5.3 and subtract 0.5. Here's where we should be at the end of the year. 48.9% for 400 to 425. Basically showing you here, right? 1 times 50 now and 2 50s before the end of the year, or 1 times 50. Is that getting complicated? Let's simplify it. The Federal Reserve puts out a report every time they meet. Here we note that we get a statement, a projection, and I have them right here. So this meeting is particularly important because there is an asterisk. An asterisk means that this is a meeting associated with an SCP or a projection. I have them. We're going to go through those right now. All right, have a look here. Why? Well, because we just take some numbers and we switch them around to get different words, right? Some numbers we switch around, some words we switch around. We just make a little switcheroo, and there you go. So what does that mean? Nothing really changed. Nothing's really changed, right? A little bit here that's like grayed out, scratched out. Who cares, right? Beep, boop. Move the words around. Here's the other words. Here's the other numbers that moved around. This one matters a lot more. I've highlighted here what matters. Do you know what these mean? Well, it doesn't really matter. You just need to know that people sold the news. So if you're interested, again, I can go through more in detail tomorrow on the stream, but I just want to keep things simple. They switched some words around, they switched some numbers around, and people sold the news. The most important ones are these ones right here. This is the June projection. So the second line is going to be the June projection. Here I'm showing you what they thought they would be at for the end of the year, end of 2024 in June versus where they are now. So with the Federal Reserve at 4.4 versus 5.1, this is starting from a point of 5.3. So again, I'm probably confusing you now. Let's make it simple. Before, they didn't want to switch the numbers around, right? They were data dependent. Now they're like, oh my God, we got to switch the numbers. And that's what they did. They switched all of them. So June to now changed. June to now changed. Unemployment going to go up. Inflation's going to stay roughly the same. And you're supposed to be happy about that. Perfect. And growth is going to stay at 2.0, right? It's actually coming down. So growth is going to be at 2% for the next 2 years. More people are going to lose their jobs. Inflation is going to come down slowly. And it's basically there. They're saying 2.3 and 2.1, like mission accomplished. Core PCE. But this is the one that matters, is what the market price is. So the Fed went big. That's what I just showed you. You're like, oh, my brain's getting sweating here looking at all those numbers. The Fed went big and people sold the news anyway. The market got exactly what it wanted. So what's the reason we went lower? I'll show you that right now. All right, so switcheroo, right? Switch the numbers around. There you go. Switcheroo. Sell the news. All right. Why? Everything was priced in. Told you about this yesterday. Saw the same style headline as the article I saw 2 days ago telling me that soft landing's priced in. 1995 priced in. No recession priced in. And all these cuts are priced in. So 4.8. Hey, we're probably sitting here at 4.5 cuts before the end of the year, which means there was no fresh sugar and we got a little bit of a hangover. That's what happened. Sugar high. Let's read John F. Kennedy here. My quote is, the only thing that's for sure is that nothing's for sure. This guy's smarter than me, so we're going to go with his. What this basically means is that you need to be patient now. You have to wait to see what happens into the close of the week. Why? Man, look, we saved the low by 4 cents, but it's a higher low, higher high. So you can look at this 2 different ways. You can say that, well, look, first of all, we got a higher low, we got a higher high. We're at all-time highs. New intraday record high today, and the selling's pretty low. Hey, I would agree with you. The bears could also say that, look, nearly a bearish engulfing candle closing at the low, increasing bear volume over the 50, and we got 2 full candles. And I would also agree. Here's a chart you might not like to see as a bull. It's the weekly candle. Looks terrible. right? That looks like a fail breakout. Why? Because it is. Tap, tap, tap. It went lower. If we look at QQQ, it doesn't get much better. This one's worse because it's a dead cat bounce. Down, dead cat bounce to a lower high, dead cat bounce to a lower high. We're probably looking for a washout here, that Bitcoin pattern I've been talking about. And remember, the only thing that's for sure is that nothing's for sure. So we have to be patient all the way until Friday. I gave you the playbook for today. I said, if we go up between 2 and 3, let's actually zoom into the chart. If we go up between 2 and 3, look for a move lower right after. First 30 minutes, we got our sugar high. Oh, yeah, we're going higher. Yeah, cuts. And they're like, oh, why are we getting the cuts? Ooh, right? That's the dilemma. Because look here, if you look at the numbers, it basically means the Fed is saying we're going to sacrifice people losing their jobs, and we're not even going to get growth for it. We're actually going to have less growth than we thought, and no more growth tomorrow. 2.0. What happens? More people lose their jobs, though. Oh, that doesn't seem smart. Okay, well, I'm not Jerome. I'm not smarter than him. All right, I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up or subscribing to the channel, I would greatly appreciate that. So now I want to show you something that happened to me today because I talked about my hedge yesterday and I got stopped out. And looking back now, I would still prefer to have this on. I need to respect my levels. I could have used an MOC or a market on close to sell at the end of the day. But again, I live in the real world. I got real trades and I can't manage these things all the time. So my stop was at 11.1, right? So on the knee jerk between 2 and 2:30 when the market went up, I stopped out. And that's perfectly okay. Why? Because the purpose of this trade was to protect the account. It's not like I'm trying to hit a banger on this one. I entered it. I got a trim. I got an exit. It's a scratch. I made some. I lost some, right? I made 0.89, lost 0.89 for a total sum of 0 because it's insurance. But the market's now getting greedy, which means I would have still preferred to have this on. If it was me as the human, I would have said, nope, I'm keeping that trade on, but it's not. But now we're into greed. So we're still seeing this ingredient that I wanted here going into the end of the week. It was as high as 59. And if you remember, what we talked about was this. I want to see where we close out the week. If we are above or below 563.04, it's a pass or a fail. Look how close we are right now. Look at the price in after hours. 562.89. That's the post market. Whoa, we're like really close, Justin. Yes, we are. It's really important we get back over it. All right, let's see if we can push forward now. What else have we got here? Boop, 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 boop. All right, switcheroo. I like that thing, right? We just take these numbers, we switch them around. Just take those numbers, switch them around, right? Beep, boop. All right, pushing forward here. What else have we got? All right, here's a soft landing. Inflation is 2.6. Growth is at 3.0. Jerome did it, right? Mission accomplished, right? Roger that, Jerome. Hold my beer. This is updated as of today. It was 2.9 this morning. It's 2.92 now. Maybe I'm just remembering a different number. I do have dyslexia. So looking here, September 18th, that is going to be today, 2.9% growth. It's coming down a little bit from 3.0 down to 2.9. And inflation is still at 2.6. We still have the elusive soft landing. And now I'm going to talk about the update to what I shared yesterday. So I sold some stocks, I raised some cash, and I managed both my accounts, my trade account and my 401k account. This is basically what I said. No changes, stops and targets are going to hit. That's what I just showed you, right? My stop hit. I didn't want it to. It did, right? This is the real world. So we got to focus on real trades. Having SH hedge on with a trim means I can't lose. And for my other account, right, they're both set and forget. I don't want to do anything until next week. I feel like I'm going to make a mistake if I do anything. So I'm just going to wait for scenario 1 or scenario number 2. That's what I said right here. And I'm going to show you this right now. Scenario number 1. Hey, we did it. We got new all-time highs. We went up to 569.68. However, if we can't hold that, how are we going to get my back test? How are we going to go to 600? That's what I want as a bull. Well, we're not going to get it. So I'm going to be patient. Let the stocks go higher. Let them back test. Let them form support. I'll buy the support. I don't want to buy it right now. I'll buy it at the same price in a couple of weeks. That's what will excite me on SPY at an index level. If we look here to the monthly, hey, we've already lost 550. It's only 10 more points. The market was stable today, but who knows what's going to happen tomorrow? Please remember, there's a feedback loop that happens. So the US trades and we react. There was only 30 minutes after the close of the Q&A, and then it goes to Europe, right? Then it goes to Asia. Then it goes back to the US. So does the rest of the world agree with what's happening? Well, the Bank of England also has a rate decision tomorrow. So the market's going to be all over this. Is it now, oh my God, buy the news? Well, we'll find out. All right, pushing forward. So out of those two scenarios, I would still prefer to be bullish. And I'll walk you through that right now. You're probably not going to be surprised. So bearish headline, big scary things, or raising cash. Yeah, but I'm bullish. Why? Because don't give up on the bull market yet. After the S&P has more than 20 record highs at the midpoint of the year, average return is 80% hit ratio for 6 or 10%. Nice. If we look here to the first part, again, don't give up on the bull market yet. After we have more than 10% at the midpoint of the year, the hit ratio was 83% for either 8 or 10%. Hey, I like those numbers. I like those odds. And there's still no technical evidence for actually breaking down. That would only actually happen on a monthly candle when we follow this 4-step recipe. I'm not going to go through that today. You've probably already seen it. We got to close below, which that's going to be down to 510. I told you what could happen, Bitcoin. Then we got to wait all the way till the end of October. We are not going to get confirmation between now and then. So if we're not going to get confirmation, what can we do? Well, we can try to find the good stocks. There's good stocks out there. In a weak tape like today, you can find strong stocks. If they can go up as the market goes down, these stocks are strong. They're going to go up. However, if they go down and they go down harder than other stocks, I'll give you 2 examples here. I'm trying to go a little bit faster now because I can see the time is at 11 minutes. Look at this one. Bearish engulfing daily candle. Yuck, right? Moved up. It was up like 3 or 4%. Washed completely out. I'll talk about this more tomorrow. It basically means that if you look here to say like a TLT, it just confirms that same thing. People already priced in all the cuts. So that's what happens. Yields go up, stocks go down, right? 10-year note goes up, stocks go down. That's simple. All right. So now it's not even that terrible out there. If we look at the last week or the last month, hey, it's still pretty green. I'm still pretty bullish until what? Until we break the chart. But look out there, right? I showed you the SLV one. Do I have that one here? Yeah, I do. SLV, right? There's the move higher all the way to the move lower. Well, here's two that crushed it. Look at this one. Look at Expedia. This one's up 7% in the last 7 days. It didn't care. Jerome Powell spoke today. It's like, I don't care. I'm going up. I'm like, cool. I like the stock. I own it. It's one of my biggest holdings. Then we look to BW, another one of my biggest holdings. And this stock's up 10%. Just today, it's up 4, right? It's up 10% in the last 5 days. The stock does not care either. I'm happy I trimmed this one in hindsight. And here's my portfolio now. So I've been talking about this for the last few days. Here's the stocks. You can see it. Everything right here. I own Expedia. I'm trying to add more of it. I'm either going to get less. I'm going to hold on to less of something that's working, up 12%, or it's going to come back down and I'll fill bids. I'll be happy with whatever it does. That's a great spot for me to be. That's basically what I mean here when I say I'm at set and forget. It means I can actually walk away and let my money work for me. There's 2 ways you can trade stocks. You can trade for your money, or you can let your money trade for you. That's called trading or investing, by the way, in case you're not clear. How many billionaire or millionaire day traders do you know? I'll wait. Not many? Okay, that's because most rich people who trade the stocks are investors. Okay, so that's what we're trying to build here. And I'm trying to learn how to invest. I'm not a perfect investor. So far, I'm doing pretty good. So you can see all my active holdings right here. And here's my platform account. Currently up by 19%. Hey, that's pretty good. Pretty happy with that. And because I've already talked about it, I'm going to encourage you to go to thealgo.com. Our sale is going to end tonight. And I know I said it's going to end before, but this is it. We're going to be closing it out tomorrow. So if you want to join me, that would be super fantastic. If not, click the video on the left or hang out with me at 9:15 a.m. tomorrow. Thanks so much.